All right, good morning. Yo, yo, yo. 1 minute. Bum, 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 bum. All right, looks like we're good to go. Who's hot to go? HOTTOGO. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus in the long term. Never risk money, cannot afford to lose. Happy Tuesday. Let's get our SIP rep report. Do I have sound? Yeah, I should have sound, right? Muted. Hello. What, audio's not on today? Or is it just the sit rep report? Interesting. Let me do a quick test here.
Gold. Rebound supported by lower energy, iron.
Try one more time. Interesting. Sure would like to have the audio. Yeah, it's definitely fighting with me. I'll have to put it on the to-do list. Wah, wah, wah. All right, well, let me actually read it. Sorry, I've been sick for Jiminy Cricket over a week now. But anyways, good morning. Here's what's moving right now. Today's session is exhibiting a mild positive tilt. Nice. That represents a notable cooling compared to the strong risk-on movement seen over the past week. High yields. Yeah, this is improved. This was 1.7, almost 1.75, which really caught my eye earlier today. And I'm like, because remember, if those yields are going up, then prices are falling in the Treasury market. And I thought, well, gee whiz, that could be a bottom. That'd be a very interesting price bottom. And so now here it is, just, I don't know, 30 minutes later, I look at it and it's not 1.75, it's 1.68. Whoa, somebody bought that dip. Holy smokes. And I mean in the last 30 to 60 minutes. Dollar still below 100. I'm super happy with that. Oil falling sharply. Yeah, this was 80 bucks. Like I said, 30 to 60 minutes ago. Aiden writes, WTI crude oil is falling sharply over 4% after reports that Syria may drop Russian oil imports. Gold prices are holding firm. Yeah, but that's a pretty good number. We were clearly below 4,100. I'd like this to be closer to 4,500. But it's in the last 60 minutes reverse course. So there's a lot going on just in the last hour. Japanese yen remains weak. Hey, remember yesterday? Market was freaking out. They're like, oh, it's central bank intervention. And I'm like, really? Are you sure? Yeah, so VIX is a good number. 2 weeks ago, this was 20. And look at this. 2 weeks ago, we were at best 7,500, but often we'd hit that as a high and then it would drop. And here we are, 7,600. Nice. Okay. Very nice.
Natural gas. Tight market, but less stressed. ING.
US dollar. Jolts opening seen retreating. TD Securities.
Euro defends the 1.1500 level ahead of a string of US labor data. Oil. Supply resilience and geopolitical risks. BNY.
Oil prices erase earlier gains amid upbeat comments on possible US-Iran deal.
Japanese yen. Relief rallies seen as selling opportunity. BBH.
Qatar's Ansari. Efforts are ongoing to seek diplomatic solution in US-Iran conflict. Mixed market sentiment amidst Middle East uncertainty. Slovenia trade gap narrows in June.
Gold. Rebound supported by lower energy. ING.
Yeah, that's it. What's going on?
Natural gas.
Let's
Tight
read again.
market, but less stressed.
Come
ING.
on, Aiden.
US dollar. Jolts opening seen retreating. TD Securities.
Euro defends the 1.1500 level ahead of a string of US labor data. Oil. Supply resilience and geopolitical risks. BNY.
Oil prices erase earlier gains amid upbeat comments on possible US-Iran deal.
Japanese yen. Relief rallies seen as selling opportunity. BBH.
Qatar's Ansari. Efforts are ongoing to seek diplomatic solution in US-Iran conflict. Mixed market sentiment amidst Middle East uncertainty. Slovenia trade gap narrows in June.
Gold. Rebound supported by lower energy. ING.
Ethereum down 2.12% as we expected. That's very interesting to see. Let's take a look at the risk radar. Vol is down. That's good. Put call ratio down. That's good. DAX is up. That's good. Nikkei is down. That's bad. Dollar's kind of flat here. Investment grade bonds. Yeah, kind of flat. S&P 500 up. That's good. 210 spread. Flat. Oil down. NASI down. 10-year yields are down. Gold up. Junk bonds flat. Bitcoin, really? 2-year yield up. Dow up. All right. Significant movers, put call ratio down, oil down, gold up, DAX up, vol down. 2-year yield up, 10-year yield down. Interesting. Definitely money moving around. Think of that. The 2-year up, the 10-year down. Kind of interesting. Okay, not a massive bull market or anything, but a lot of the down has been removed. I'm okay with that. That's a start. We got jolts coming out. Kiwi jobs. That's coming out soon. Don't forget at the end of the week, we got some NFP. Let's go all the way out here. NFP. We got the kitty cat jobs as well as non-farm payrolls. Pretty normal. So that's going to be a big day Friday. Okay, pretty good week. Check the scatter plot. Okay, the skew is really narrowed. Big move in platinum. What else going on here? Bitcoin down as expected, oil down as expected, nat gas down as expected. You kind of have to zoom in to get rid of that. Take out the outliers and skew. Things are okay. Things are just, these are modest moves so far, less than 1%. Currencies. Looks like Kiwi is weak again, but CAD is even weaker. Yeah, faux show. Just eyeballing to see if anything is crazy out of control here. A lot of love for Nikkei. Kiwi dollar down, Kiwi yen down. A little bit of a theme, huh? CAD weak, CAD weak, CAD weak. Okay, yeah, okay. This is pretty stable. So USD CAD long, Kiwi dollar short, Aussie CAD long, Aussie Kiwi long, Aussie Swissy long. Lots of love for the Aussie. I hope you're trading it. As you can see, we love Aussie and we don't like CAD and we don't like Kiwi. Now, if we're moving towards risk on, I'd like to see dollar go from moderately strong to moderately weak. So let's take a look at our technicals here. Yen's still relatively strong. Pound yen down, euro yen down, dollar yen down, CAD yen down, Kiwi yen down, Aussie yen down, Swissy yen down. Same as yesterday. When you create a basket synthetically by analyzing all of this, the yen is strong relative to everything. Not by a ton anymore, but there you go. It's good to have the facts. Dollar's still pretty strong. Yeah. CAD, terrible. Pound, no so good. If you're trading euro, you're trading the wrong thing. If you're trading Kiwi and Aussie, they're not happening right now. Metals working, energy is not. Okay, risk is definitely on. Therefore, stock market is definitely on. Very cool. Step back a little bit. Maybe out to a swing here. Yep. So nice to have this data. So, Wayne, tell me what to do. Okay. Kiwi dollar up. Kiwi CAD up. Euro dollar up. USD yen down. CAD yen down. Aussie yen down. Oil down. DAX up. S&P 500 up. Cool. If you go down to the day trade, it may be different here. And okay, yens are down, dollar strong. Cool. So let's take a look. Look at that jump really pulling up the trend. Nice little moves. Gorgeous. Matthias wants to know if the Fed is monitoring the Bank of Japan and will that affect their decision? Not even in the slightest. Not even a little bit. Yeah. Yeah, Ray. Well, click the button. It asks you, are you in the United States or not? You say yes. Then it gives you your solution. Come on, dude. You got this, right? You don't have to guess. It's well documented. You say, I'm an American. It provides you your solution. There's no reason to jump in. So, for example, click rewards. Okay. Click join. Okay. Fill out the form. Okay. You got it, man. Think you're making it overcomplicated, right? Come on. You got this. So you guys, when The 4.75. Let's see. What do I want to do here? I want to go to the econ rates radar. So we get to the rates radar, and now we're at 62.6% chance of a hike. Well, H2O producer. Maybe it's somebody else. The thing is, just fill out the form. Like, you don't need to ask. All right. Yeah. So we're still getting that. And this is what is leading rates. And we get to 4.75 today, and it held strong on the 10-year, which is fantastic. So we'll have to see how that impacts. Did we hit a floor? Yeah. And so these, when we get to here, flows into the short end of the yield curve, they were very negative, and as you can see, longer duration is even more negative. But this started to turn a lot less negative yesterday and today. Now, this is telling us that when you look at the long end of the yield curve, what it's saying is they're most sensitive to changes at the Fed funds rate. And that if the Fed is going to raise interest rates, these treasuries lose money in price. And we've known this for a long time. I've explained this 100 billion times. So you can utilize this and say the treasury market expects the Fed to raise interest rates. That's one way to do it. So we've been pricing this in for a long time. Great, fine. The market is not pricing in 3 or 4 or 5 rate hikes. And even then, even 2 rate hikes is pretty iffy over the next 12 to 18 months. So the next trigger is to suddenly note or to notice if these turn less red or even green. Because right now the red is showing money is flowing out of the 30-year, out of the 20-year, out of the 10, but it's showing what this idea of duration, that the 30-year is hurt a lot more than the 2-year. Then there's something called convexity, which says, yes, they're all negatively impacted, but not necessarily in a linear fashion. And that there can be a shape in the change, and that's convexity, meaning not linear, like concave, right? And that you can get really into the weeds here, but you should, especially as a Forex trader, use your treasury, yield curve and just say, oh, we're pricing in a hike at some point. And then be able to react to that like dollar strength. And we've had dollar strength for quite some time based on this. But imagine suddenly this was green, 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 green. That might be also quite different as far as its impact on the economy. But just reading the tea leaves here, yeah, yields are going up, rates are going up. Yep. Flows are happening. So like right now, a 2-year is at 4.25. A year ago, or about a year ago, the 10-year was at 3.88. the 10-year. Yeah. So anyways, as these numbers are going up, the price is falling. That's the right. That's the inversion there. Yields up, prices down. And I put the secondary line there and then had this there so you can see the change. A lot has happened in the last 30 days, and it is a pricing in of a change in rates. Now, doesn't mean they're correct. It means that's the decision being made. Now, pretty soon we're going to have Fed meeting minutes, and we're going to find out that Warsh wants to do less meetings. He wants to do quarterly meetings where they can address the Fed funds rate, and 2 more meetings throughout the year to just talk about policy. That's interesting. Now, how do I know that? Oh, he called me and asked. But anyways, we're going to see that in the meeting minutes, and I'm very curious to see how the market responds to going from we'll call live meetings, 8 meetings throughout the year in which the Fed could change monetary policy down to 4. And then 2, let's say 1 per half, is to talk much more about like the economy than changes in monetary policy. So it's kind of an interesting framework. Can't wait to learn more about that. So I don't know if you guys sit on this page or not. This is one way to run your daily routine. We're only bullish on one pair. And we're not very bullish, but we're bullish on one pair for day trading. I didn't even see your question, YouTube FX Guru. Would have to scroll up. Oh, the intervention. Well, the SITREP report is Aiden reading the news and reading the data. It's not necessarily his opinion. What he's saying is that's what's going on in the market. That's the situation. What I'm trying to tell you is the idea right of there's what the Gen Pop understands, and then there's the reality of what is actually happening. And it could be some intervention, but is it all intervention? Well, then let's say I got crazy lucky last week when I did a speech about the about the yen getting strong based on completely other points of data. I want you to think about that. Before anyone said anything about intervention over the last few days, I very calmly, with logic and intelligence and experience, and prefaced it years in advance on what to do in a scenario of a major earthquake in Japan. So imagine 15 years ago, I did the exact same speech. There's a major earthquake in Japan. Your response is to buy Japanese yen. Great. So we had a major earthquake in Japan, and I reiterated very calmly, very logically, very intelligently, there's a massive earthquake. And then I gave all the reasons why the yen would get strong. Okay. So 3 days later, the yen is massively strong. And the world, which mostly doesn't understand these things, simply looks around and goes, well, the last time the yen got strong, it was intervention. So therefore, it must be intervention. Well, you believe what you want to believe. And maybe it is intervention. But then I got like straight up unbelievably lucky, huh? A 3-point shot from half court, some skill, some luck. But I wasn't surprised. It wasn't shocking. An intervention is a shock and awe type scenario. You see? So maybe it is intervention. Okay, great. Good. Well, you can't plan for that. But I had you plan days in advance for yen strength. And if you listen to me and you did your technical analysis, you would have seen it happening, forming, and you would have traded it. But maybe I'm wrong. Yeah, well, at least you were prepared. Yeah, I just think you're smarter than a journalist major. So when I was at Bloomberg, I did 2 seasons of a show and got to know the producers and stuff. And so I'm in the Bloomberg offices at midnight or something, and we're just shooting the shit. And I noticed on her desk that she had like 5 books on Forex because she just learned Forex. Well, guess what? The whole show was about Forex trading. And so I'm like, oh, she's about 2 weeks into learning what the foreign exchange is. Good. So now she's qualified to do a show on Forex. Uh-huh. So just don't be fooled. They're journalists first and foremost, not investors and traders. Yeah. And then in sort of the media, when it comes to like website type media, YouTube guru type media, blogger type media, there's a propensity towards heavy technical analysis. So if suddenly all the yen pairs drop and 90% of the understanding about the world around them is charts, then they don't really have any clue of what just happened. But what they do know is 6 months ago, a year ago, 2 years ago, there was Japanese yen intervention. Now, at that period, what we did was watch the yield on the Japanese government bond. We actually read all the reports from the Bank of Japan. Like we were hardcore tuned in, 1,000 levels above the average trader. And we were ready, willing, and prepared well in advance. Now, I don't think any of those gurus are logging into the Bank of Japan and downloading their reports and reading them on a daily basis like we do, or watch the yield on the JGB in near real time and combine that with technical analysis. They just don't do that. So what would you do if you only knew charts and you only knew in the past the yen got ripper strong just out of the blue? Well, you're like, well, that must be intervention. Good guess. But if you don't know, you don't know. And you're like, well, this time maybe it's repatriation because of the earthquake. And again, I explained all of this in detail, what repatriation is, why Japan is very specific to this and versus other countries. And so anyway, so they see the red candles on the ends and they're like, this must be intervention. And yet it probably isn't, or isn't completely that. Okay. So what we saw in the past with intervention, how about this food for thought? In the past, we saw intervention wrapped around skyrocketing oil prices. When oil was 110 and above, the Bank of Japan needed to manipulate the value of the yen because the country needed to buy oil at extraordinarily high prices. So if they were going to purchase oil, they needed a way to increase the purchasing power of the Japanese yen. And through intervention, they strengthened it just long enough to have a half decent yen to buy a bunch of oil. So now the world says it's Bank of Japan intervention, yet oil was at $85 and now it's at $75. You're like, well, that doesn't actually make sense. Why would the Bank of Japan go through all that effort when oil's at 85? They didn't do it at 95. They didn't do it at 105. They did it at 115. So instead of 115, they decided, I mean, look, it's a big deal. Intervention is a massive deal. They don't just do that lightly. It has to be an extraordinary situation. And they're not going to go, oh my God, oil is at $85 a barrel. We must do something radical. So I'm like, I don't know. Maybe they did, but in my simple childlike peon brain made out of cotton balls and candy, I don't know. It just doesn't add up. But an earthquake, that totally makes sense. So, okay. So, we have 3 different time frames here that you can choose. This is very, very short-term day trading, intraday trading, maybe even for you skippity scalpers. If you want to step back a little bit, but not too much, because position trading is for 30 days. So, we can back out and say, well, what's kind of happening more in general instead of just like today it's long, today it's short, today it's risk on, today it's risk off. You can step back a little bit. It's kind of like going from a 15-minute candle chart to like a 4-hour candle chart. And you can just kind of get an eyeball of what in general is happening more than right this second. But again, if you're going to be skippity scalping or position or day trading, and remember, the best form of day trading is around market opens. I hope you fully understand that. When you go to Investor Bootcamp and go through the training courses, like we make a huge deal about when do you do what you want to do? Like for many people, they're doing the right thing at the wrong time of the day. That's a big thing. I don't know if you fully appreciate that. So by the time we get to 9:30 today, you're like, oh, the stock market's open. Now we should be trading. No, you're already 3 hours late. How embarrassing, huh? You're late? Yeah. So day trading is wrapped around like Asia Open, London Open, New York Open. And it's a way for you to eyeball what you want to do. Let me also remind you that if you don't know what you want to do this morning, before you even get to this, that's another one of your problems. And yeah, it's your problem. So what I'm saying here is if you don't know that you're a bear on CAD, if you don't know you're a bull on Aussie, then you have a problem. You don't know what to do. So you're waiting for this to tell you what to do, or you're waiting for a chart to tell you what to do. No. You're supposed to be a boss. Right. So, and you say, well, Wayne, how do I figure that out? Oh, well, let me show you again. There it is. Okay, look, problem solved. Are you a bull on Aussie? Are you a bear on cat? What about Kiwi? Okay, like you should just know this. And if you disagree with that, I'm okay. Just know where you stand. What team are you on? Are you on the bullish team or bearish team? Are you on the risk on team or the risk off team? What do you do? What do you stand for? Take a stand. We call that bias. And as I've explained a million times, you can flip a coin, establish your bias, and improve your trading. Because you have to have confirmation bias to be able to trade consistently. If every day is a new day, every day is random to you, and then your behavior is random, you're just going to fail. There's no mathematical hope, none. Guaranteed to fail. It's better to go through periods of no trades because the market's not lined up with your bias. At least you're consistent and at least you're patient. Okay. So for example, like we're bullish today, right? So we go here and Aussie is neutral. Is it a good time? Not right now. But you're bullish. Uh-huh. Okay. Is this a good time for Aussie right now? No. Maybe later. That's where I want you to go. And so you can get to the situation where you set this up and you're like, okay, I'm waiting for Aussie to strengthen, and it's not showing up in many of these places. And conviction levels are bad. Well, that's because it hasn't happened yet. You're guessing. Okay. So you could sit here and say, like, let's go back to day trading. You could sit here if you were patient and disciplined to say, I'm waiting to buy Aussie. So Aussie in the numerator here, or Aussie in the denominator there, or nothing at all. Right now, all the Aussies are in the sort of slight edge neutral scenario. So now you just wait. See, if you stare at your chart first, you're going to find a reason to trade it, right? Big mistake. Why don't you let other people start to buy Aussie? And if they do, then you do the follow-on trade. Do you remember the joke yesterday? Picking bottoms is a strategy that always stinks. I do these sometimes crude analogies because I want you to remember them. If you read my book, you understand what an old man easing into a hot bath means. Yeah, I wrote that in a book. David says, only day trade when the swing. Okay, so I don't know if you spend time on the confluence radar. Okay. These are the things that have direction on 3 time frames. That's it. Out of our 27 assets, David, there's only 3 lined up. Sell Bitcoin, sell Ripple, sell Dogecoin. Buy copper if you're a copper guy. Now you're saying you want to combine swing with day trading. Well, you might be doing it by switching time frames back and forth. Oops. You might be going like this, and then you're going back and forth, back and forth. But what I was showing you is if you just did it in your mind, it's so much easier. Okay. So you're into Aussie, maybe some dollar, but you'd prefer it to weaken. And in the last couple of days, it has been weakening. But we know seasonally it's early for that. So you're like, I like Aussie, I like dollar, I like pound. And I dislike Kiwi, I dislike CAD. How about that? Now you're done. Because that assumes the medium and longer term. That assumes you're swing trading. You can just take a screenshot every few days and print it out. Okay. And then you can go to your technical tab and wait for them to agree. So you're like, I want to buy Aussie. Not right now. I'm interested in dollar. Oh, that might be good. What about pound? No, pass. Okay, I want to sell Kiwi. No. How about CAD? Faux show. You see? So you're like, well, I'm into selling CAD at the moment. Cool. So now you go to you can go to day trading, CAD. So you want to sell CAD. It's organized by best buying opportunity. That's not that good, is it? Okay. This is better technically. This is better technically. This is better technically. Plus, you want to be long Aussie anyway, so you must want to favor that. So you can see the higher high, buy the dip, higher low projection. Okay, and then if you switch this way, you want to be a bear, don't you? And we already know the yen is strong. So yeah, you're selling rips, right? Yeah. Looks like you missed a sell at 112.50. You see? You don't overcomplicate it. The only thing that you agree with right now is selling CAD. Cool. Okay. Isn't that nice? Of course, there's a lot of data on the platform, but you don't have to go through every single tab to make a decision, do you? Find the thing that connects with you the most. Health scorecard. Oh, I want to sell CAD, sell Kiwi, right? So my little hack is take a screenshot, and then you go to the technical chat tabs and look at our synthetic indices. CAD's weak. You're already bear. Good. That's your focus right now. Now, you say, well, Wayne, how do you make the determination that we're bearish on CAD? Oh, well, good question. We look at GDP, we look at inflation, we look at employment, we look at interest rates, we look at the COT, excuse me, positioning. We looked at seasonality. We do an aggregate score and we're negative 0.134. Okay, we are not uncertain. Cool. Yeah. Cool. Okay. The other thing you can do if you really want to be sort of conservative, you can switch to position trading. I don't know. How about this? You don't even want to see this shows you kind of everything, right? You're like, whoa, 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 whoa. I don't want to see that at all. You just want to see when the best opportunities have a cat on it, or if you're a bull, when the best opportunities have an Aussie on it, right? All right. So we want to sell CAD, right? I'm trying to show you how to simplify your decision making. Now, imagine if you have a framework like I'm sharing with you, you're only buying Aussie and you're only selling CAD. You're only buying dollar and you're only selling Kiwi. You're patient, you're disciplined, you're consistent, and you can trust if you want that there's huge amounts of data behind all of this, both technically and fundamentally. So you woke up this morning or yesterday morning or the day before. Okay. This gets updated all the time, but you're bare on the CAD. It's not a surprise. Cool. So look, the best bullish opportunity is buy dollar, sell CAD. The best, right, selling opportunity is sell CAD, sell yen, or buy yen. Well, shouldn't you be doing that? See, the best selling opportunity is CAD yen because it's at the bottom, negative 3.5. Isn't that nice? Doesn't that make your life easy? Or at least the process, having a consistent framework for decision making based on quantitative data, including macroeconomics, fundamentals, technical analysis, and market sentiment, all in real time? Don't you like the fact that your framework only includes data that we get from 22 different central banks and government agencies and nowhere else? Okay. Okay. You see, this is your secret sauce. So I'll leave you with a thought. 2 weeks ago, I was at Vegas talking. I did a keynote speech. I'm on the main stage. I got lights on me and I got monitors everywhere. And, I'm doing the thing. And somebody asked about, you know, I don't know, the framework, the process, making decisions. And I was, you know, like I tend to be pretty blunt, pretty clear. I said, look, if you're still making your decisions about trading and investing the same way as you did 3 years ago, you have already been left behind. Okay, just imagine now every trade you make, the timing has been improved, the logic has been improved because you're analyzing millions of data points. Yeah, so YouTube FX gurus just noticed that there's a correlation, huh? Yeah. So, anyways, Peace on earth. May the pips be with you. May our profits be above average. That just happened.